Traders, investors, even you degenerate gamblers, yes, I'm talking to you. We're back, and I want to give you a little bit more information and let you know what's going on in the market right now. So SPY is breaking out. Over here at the top of the year, of course, we've had this dramatic fall correction right here. Bounce up, found resistance in this area, fell down again and found support. We are seeing somewhat of a reversal channel, and now we've actually broken out of that channel, which is a very, very bullish signal. I do think we could see something kind of like, think it bounce right there and go up there, something like that. Do I think we're going to see all-time highs? That's the question everybody wants to know. Are we going to see all-time highs on SPY? I think it is unlikely that we will see all-time highs without some serious volatility first. If we take a look at the volatility index, VIX has taken off and really found this area of support consistently since the top of the year. We've broken down, and our next substantial area of support is around 1741. After that, it will be about 1634. So we have a little bit more ways to go on the volatility index. And if you're just getting to the channel, the volatility index is pretty much a fear gauge in the markets. If you see volatility going down, that means typically the market will be going up. And these high areas of volatility that I have notated right here, these are areas where we want to be stepping in to buy the market and take advantage of all that fear going on. So right now is not the best time to necessarily be buying. If you're in positions, I would definitely continue to hold those. Even though SPY has recovered. Let's take a look at the exact distance. We have a recovery of about 12% so far. Even though SPY has recovered, we do have a little bit more distance to go as far as NASDAQ. NASDAQ's only recovered, has recovered 17%, but it was down a lot further. NASDAQ went down 21%. So we should see definitely a little bit more pop in the tech stocks. Also, a lot of tech stocks are still under the 200-day moving average. Like, say, for example, what do I mean by that? Square. Square, which is a major company, and I think is going to perform very well over the next few years. If you take a look at the moving average on there, and hold on, let's put the moving average on. It's just right at the 200-day moving average. So on certain tech stocks, we have a substantial amount of upside potential. Even let's say Facebook, for example. Facebook is still right under there. AMD is above the 200, is right at the 200-day as well. And actually, and let's take a look at SQ. SQ is well under the 200-day moving average. So we got a lot of room of upside potential there. If we take a look at NVIDIA is just bouncing above the 200-day moving average. Certain stocks like Apple are still kind of flying high. They're a little bit extended from the 200-day moving average, as well as probably Microsoft. Microsoft has a little bit more room as well. So there's a lot of upside potential as far as the large cap stocks go. And if you didn't see the last video, this chart will give you a little bit more explanation to what's going on. This just represents the target fund rate from the 90s to current. As the interest rates rise, stocks tend to rise with it. So with this uptick in the interest rates, we should see stocks going up long term. We'll have some volatility in the short term, but this is very, very optimistic. I'm optimistic on stocks just because of that information of bonds and interest rates going up specifically. That's it. I just want to keep this short and make sure I got you some information so you can manage your trades that you're in currently. And if possibly open some positions on some of the more undervalued tech stocks. May the markets be with you. We'll talk to you next time.